Hi everybody, it's Jenny from Raise. How are you all today? Thanks very much for joining. We're just opening up the Zoom room right now and getting set up and organised. We are based over here in Belfast in Northern Ireland, so even if you want to shout out, tell us where you are, or pop it in the chat, let us know where you're based. That would be great. So hi, I'm Jenny, based in Belfast. I'm just going to wait for a couple more minutes and then we'll get started just to see if anybody else wants to join. We're also recording today so that we can show to anybody who can't make it. Hi to Eve Jane over there in the office based in Belfast. Lovely to see you.
Hi Jenny, how are you? With Jan?
Yeah,
Jan here as well.
Hello.
Brilliant. Thanks very much for joining in the office. We're just running online and in-person hybrid workshops, so thanks for coming in and lovely to have you.
Thank you. Thank you very much for having me.
No, you're very welcome. Today is a bit of a session just kind of covering off Angel 101. So again, share where you are, or share if you have any experience in angel investing or not. If you're brand new, we're open and welcome to both new and existing investors. So Jan, are you new to the angel investing world?
Well, yeah, at the moment, I'm at a stage that I'm working on a few projects, and one of my projects will be probably launched this year. It's a mobile application, and we were thinking about to actually get another investor. I already got investors on board, but we were thinking to take a global scale and to bring some dragon, on board. And So I'm not sure what will be the best thing, if it's better to bring the investor before we launch the project, or after, when we have some statistics, obviously, yeah. So we are not sure if it's better to bring investor now or after, whenever the project is launched. We think that we can get a better deal if we will have the product launched already. It will be fully working. We will have some statistics, how many users, what they're doing, and stuff like that. But I'm here also because I was wondering, maybe you might help, with some of the information that, I have checked several websites with angel investment,
Sure.
like angel investors, obviously in US, UK, here in Northern Ireland. And I was just wondering, maybe you might know better which website works the best. We also have some private contacts, some private connections for investors, but I was thinking, obviously we need to be prepared for any kind of scenario. So we will probably try also the angel investment websites. So
Yeah, I really appreciate that. We're coming at it from the angle today of if you are an angel investor, so we'll cover some of those points as we go, and happy to kind of catch up in person or online separately about how startups kind of approach angel investing. So this workshop's mainly for people thinking about angel investing. So yeah, some of the things we will certainly cover off, but happy to pick up after. Thanks everybody for joining. We're going to kick off. Lovely to see you guys. If, as I said, drop in the chat where you are so we know where you're dialing in from. Anybody want to say hello, please pop off camera. You're more than welcome. We've got Andrew, Nick, KM, Norm Boulace. How are you all? Don't worry if you're busy and you're just listening in, that's fine, no worries. We'll get caught up and we'll get started. Happy enough?
Thank you, Jenny.
Let me just share my slides. You see that okay?
Yeah, that looks good.
Brilliant. Oh, well, we'll get started. Yeah, so just to give you a bit of a background, we are a startup accelerator. We're based in Belfast in Northern Ireland, helping startups across Northern Ireland, the Republic of Ireland, and into the UK. And we help startups accelerate and raise investment through our program. And to do that, we essentially come on as advisors for a 6% equity shareholding. So we do quite a lot of due diligence, quite a lot of polishing and improving their business before we kind of put them in front of investors. And really, from an investor point of view, that's one way that you can de-risk some of your investors, is kind of get part of a community, get part of a network that the deals have already been looked at and polished to some extent if you're getting started. At the end of our programs, we run connection pitch events, and they run 3 or 4 times a year, where we bring in-person and online startups to meet investors and connect and have those conversations. So that's what we do, and we're seeing a real increase in interest in this space in terms of angel investing. We really want to kind of help people learn a bit more about what it is and how to get involved. So that's really the workshop today. So we're going to have a chat about what is angel investing, upsides and risk, how does it fit into your portfolio, how you get started, and really where to look for good deal flow. If there's any questions, pop them in the chat and or shout out during the presentation or after. And as I said to Jan, happy to pick up individually also after the call. So let's get started. So really going to start with the real basics, and if anybody kind of wants to dial in or pop in their questions, please do so. So let's have a quick look. Angel investing is really investing directly into startups or scale-ups that have the potential to grow, exit or scale. What we're talking about here as an angel investor is somebody who uses their personal disposable income to invest, and you might see through some investment processes like crowdfunding, or if you join a fund, they ask you about your kind of sophisticated, they call it sophisticated high net worths, whereby that you have some disposable income, you know, you're not investing what you can't afford to invest, and really investing is about exchanging. So at the point that you come into a company, you're exchanging your money for a slice of their pie, a shareholding in their company. You're buying that at a certain valuation at a certain stage, and in our case it's quite early stage, and you're hoping that they have the vision, the team, the product, the commercialization opportunity, that opportunity will scale and grow, that valuation will grow, your shareholding percentage and value will grow, and the opportunity therefore is to make a return as those companies exit. So that's kind of the process and how angel investors get started. They bring experience, they bring contacts, and not just in business, but in industry. So quite often angels will invest in what you know. If you come from an insurance background or a creative industry background or a medical background, quite often you'll understand the business model, you'll understand the problem in the industry that you'll know, and therefore bring the contacts and help broaden the success of that company through your contacts and experience. So that's really what angel investors are doing. Quite often we've got a couple of blogs on this. We talk about startups when they go out and raise investment, they're looking for angel investors within their network and beyond. We call it 3 Fs, family, fools and friends. And fools are termed angel investors. It's not really a great F, but we need to make sure that they're encapsulated somewhere. So those are the early stage investors that come in, angel investors investing their own money into the companies. Oh, sorry. There we go. So the benefits of angel investing, what we've talked about, buying in early, there's a potential for that company to exit and there's potential to be high return. Not only is this about return in money, it's about an opportunity to pay it forward, for you to use your skills and expertise that's built up over a period of time to give that back to the companies coming behind you. It's an opportunity for you to diversify your portfolio. We'll talk about that shortly. It's an opportunity to learn about new technologies, stay ahead of trends, something quite often we see as angel investors talking about their investments as kind of a good news story in their own kind of hobbies or networks, whether that be on the golf course or around a cup of coffee or at a dinner. It's something that you can showcase that you're learning and developing your own skill set, something to talk about as a networking opportunity and meeting new people. And then layered on top of that, the government, if anybody heard of SEIS or EIS, it stands for Seed Enterprise Investment Scheme, and it's an incentive by the UK government that can incentivize angel investors into companies. Geez, sorry, skipping through when I click, it seems to click a couple of slides. Bear with me. So what is the Seed Enterprise Investment Scheme? Anybody heard of it? Don't see anything in the chat right now, but that's okay. So let me just keep moving on through. So really, as I said, it's a UK tax benefit whereby the startup can go to HMRC and say that they are a high-risk business, and as a result, they can qualify for this tax relief. So if you invest, you can invest your money, and as a result, say this is a high-risk investment, and as a result, you're due some tax relief back on your self-assessment tax. So a really early stage company comes under the seed investment scheme. They're quite small, under 25 employees, they're less than 2 years old, and they can raise under that scheme up to 250,000. Michael, that's just changed recently in the most recent tax year. It was only 150,000, so that's good news for the companies.
Yes, I think they've realized that 150k doesn't get a tech company as far as it used to. Therefore, wasn't really a sensible level to have it at, so we've increased it up to 250,000 pounds, which is great for any early stage company.
Yep,
I think yes, I do. Yeah,
great news. And so then the startup can raise 250,000. You as an investor can place up to 200,000 per tax year under the SEIS scheme and receive 50% tax relief off your income tax bill, so essentially 100,000 back off your tax bill the following year. The next stage is the early stage company, slightly older, maybe 2 years old, but under 7 years, and they can raise up to 5 million under EIS. So that's the company themselves. You as an investor can place up to 1 million of investment a year in an EIS scheme, and you can claim up to 30% tax relief back on that. So that's up to 300,000. So then thinking fast forward, what we talked about, buying in early and selling in the future. If you hold that for a number of years, beyond 3 years, quite often early stage can be 5, 7 or 10 years that you're investing and holding your shareholding for. So once it's sold in the future, there is no tax on the growth. There's also no inheritance tax on the shares if they're held over 2 years. There's a link there with Seed Legals that you can find out more about both those schemes, but it's something that you should consider or think about when thinking about angel investing. Okay, so linking into the so skipping again, apologies, something not quite right with my flicking through the slides. We'll keep working. So thinking about the risks of angel investment, EIS and SEIS is one way of de-risking it, but I guess you need to think about, how you diversify your portfolio, invest in what you know, looking for good deal flow, learning from others and being prepared. So it's all about, can be quite risky, can take a long time to generate returns. I guess don't invest what you can't afford to lose, because sometimes these companies don't go anywhere and they close and there's no way that you're going to make your money back, and they've no assets to chase for insolvency. So I guess that's important to note. So how does it fit into the portfolio? I guess it's about investing those disposable funds is a job in itself. And if you look at it at a matrix, it's thinking about short-term, long-term investing and risk appetite in terms of low and high risk, and then also kind of thinking about what you're interested in. So you may already have thought about property or stocks and shares, ISAs and pensions. These are all recommended by the wealth managers and financial planners. And then if you ask, how can we be a wee bit more innovative? How can we think about kind of higher risk, longer term? That's the angel investment space, and that's EIS and SEIS. There are some funds out there, mostly across the UK, some that we work with quite closely, and they then go out, raise funds from investors and then deploy into early stage companies on your behalf. So that's one way of getting involved, or another way is joining a syndicate and doing it together with other angels, or doing it on your own. So there's a couple of different ways of getting involved as angel investors. I guess to get started, investing a small percentage of disposable funds is a good way to get started. We get the question quite a lot, what does a small check look like? It can be anything from £10,000 up to 200,000, or up to the minimum of SEIS. And I guess it depends on your appetite, your understanding of the company, once you get started, starting small is probably what we would recommend. And the reason we think about the 10 to 20,000 mark of starting is even to pay the legal bills sometimes, or accountancy bills for a company, or to pay for a resource, that £10,000 isn't going to last very long. So I think it's important to realise what the money's going to go towards, and quite often you encourage the startups to have that plan and to make sure that they know what the money's going to be spent on, and you can clearly see, right, if we put X in now, here's the plan going forward, here's what it's going to achieve in the next year or the next 18 months. And we see that early stage, Michael, quite often in terms of kind of step investing.
Yeah, I think it's you want to be careful that you don't put everything into one project. And also, I think you also have to be very conscious that a lot of the time you'll put money into a company and they'll get to a certain point and they might have a second funding round and a third funding round. So sometimes you want to be able to have those steps to be able to follow on and reinvest as you go through with the company. So
we are not professional wealth advisors or wealth managers. We do encourage you to go and get some financial accounting and advice, but it is worth considering. So when you're talking to a company, you're really building that relationship. You're getting to understand their business model. You're getting to understand what they do, what the opportunity is, and it's really thinking about that valuation and what percentage of that pie, at the start would be worth kind of buying. And anything between 0 to 20 is kind of what we recommend for early stage. You're looking to come in and join those founders at the same share holding, the same class, we call it. So ordinary shares is what that's called. So they have ordinary shares, could be 100%, could be 30, 70% if there's 2 founders, and you're coming to join them on their cap table, their list of shareholders at the same shareholding. You're looking to ask them what valuation their company is worth at the moment, and you're looking to invest a certain proportion at that valuation. But the reason we say only look for a certain slice of the pie is because those founders have spent a bit of time already building their company. They've invested time, energy, sometimes money into building that company, and it's a long journey. As I mentioned earlier, it could be 7 to 10 years. So they need to have enough equity throughout the investment journey to be incentivized to continue. So every time investors join the share cap table, the founders and the angel investors and the funds will dilute in terms of shareholding, but the value of that shareholding is increasing. So that's important to note. There are various levels for you as angel investors to get involved. We've seen a mix across our network, everything from the lead investor that's maybe done a couple of deals and wants to really be passionate about the company, really wants to get involved. So they know the company, they carry out the due diligence and understanding, is this a good opportunity? Maybe do some of the negotiations on that valuation piece. And they work with the company to produce a term sheet. So set out on black and white, we are agreeing to invest X for Y to hit ABC. And then once you go through that investment process, looking to possibly take a place on the board. If you're familiar in terms of running companies and governance of a company, making sure that we have a board in place is really important. The founder wants to build that board as early as possible, and angel investors brings expertise, good governance, and kind of independent talent and support to that board. So that's really at the most involved level. And that can vary then down to elements of maybe you want to connect with the company and invest some money, but you're busy. That's okay. Make sure there's a board in place. Make sure that your money's going in and being looked after, and you can have shareholder kind of updates. You don't have to be actively involved. And then right down to the other side of the scale, where quite often we talked about syndicates, that it goes in one lump sum. 3 or 4 investors, 1 lead investor, and you're just putting money in to make up the pot, you know, you have an interest in the company, you like what they're doing, but you don't really want to or don't have time to get involved, and that's okay too. But the money is important to them as much as the expertise, and vice versa. So it's just understanding when you're thinking about angel investing, kind of what time, availability, how much you would like to get involved, and really having that conversation with the company, because their expectations might be different to yours. Michael, anything on the kind of involvement of angel investors?
I think some people get very involved. Some people just give their money and let them get on with it. It's sort of up between you and relationship you have with the founders, and the value that you can add. I think you always have to remember that what you're just trying to do is act in the best interest of the company. So if your help is going to help the company, then yes, do get involved, because it's for everyone's benefit. But it's up to you, the relationship you have with the founding team.
There's a question there just come in about the dilution piece. So very good question. So at the start of a company with one founder, they own 100%. And as you as angel investors start to join the company, you're buying slices of that pie. So you might come in and buy 20%. But then the company progresses to the next stage, and the idea is that they will be able to show traction, they will be able to show customers, they may be able to show some revenue coming through, and then you revalue the company and possibly go out for more investment. At that point, when more money comes in, they're now buying a slice of the pie, and everybody is the dilutionary effect kind of goes across everybody. So I think we've got some maths on a cap table I can share with you. I don't have it to hand right now, but I think it's just understanding, like every event I think we've seen recommended in various blogs, as you would expect to have a 20% dilution on your current shareholding. That sounds about right, Michael. So like, I can't do the maths in my head. If you have 20%, you expect to be diluted by 20% of that 20%, if that makes sense.
I think you just have to be reassured that if the company is growing, and the value is growing, while your percentage ownership of the company will reduce, but the overall value is going up. Therefore, the value of your shares is going up. Therefore, you're not losing money. And where it becomes difficult is if the company gets into trouble and they do what's known as a down round. In that case, where the valuation drops, it becomes more difficult. But hopefully that's not going to happen too often.
Yep. Does that answer your question, KM? Well, we'll keep moving and sure you can drop us a message. So, quite often in terms of the startups and the ideas that are out there, there's an awful lot of good ideas, let's call them, that people want to, be the next Facebook or, and it's really understanding what does that mean. So what we do through our program and what you need to do as an angel investor is look out for certain signals that might improve the success of that opportunity. So what you're keen on is a good team, a team that might have some expertise in the industry, might have some technical expertise because they're building a technical product, or has connections, or good team's really important. And that's not just the founding team, the people around them, their advisors as well. You want to look for a good technical product. It's well built, it's scalable, it has some substance to it. It's solving a real problem essentially, and asking technical questions about what does the tech stack look like. If today you sell that to one user, great, but what happens when you sell this to 1,000 users? Is it scalable? Is it robust? Is it going to be able to deal with that number of users? Those are a couple of questions. And then in terms of one of the things we're working quite hard on, Lena and Eva Jane here, in terms of resilience, we're working quite hard to move our founders from just founders into leaders and CEOs, because it can be quite a challenging, long process, as I said, up to 7 years. So Eva Jane, do you want to touch a wee bit on the resilience piece?
Yeah, absolutely. So I suppose, when you are investing your own money, you want to make sure that it's going to someone who will be able to deliver on that value. So we're working hard in our program to ensure that the founders have that resilience, both that resilience and that ambition to dream big.
Thank you. So these founders then often come from industry, they often know their markets, they'll be able to go off, do some research and get some facts and figures about how big the opportunity is, and that's the large customer market that we're looking for in these opportunities. It needs to be able to scale, it needs to be able to hit a large number of customers for it to grow in that valuation and for it to be of interest to a potential exit and acquisition for you to make a return. So large customer market's quite important. And you need to think about their business model. Is it straight B2B SaaS, business to business service, software as a service? Or is it enterprise sales, or is it licensing? What is their business model? How are they going to make money? Is it advertising? Is it B2C, B2B, business to government? You know, what is it? What are they doing? And understand that business model. So back to the point that Jan mentioned at the start, when's the right time? So angel investors are definitely looking for market validation and traction. And at the early stage, you need to have some signals. So going out, talking to customers, getting feedback, showcasing that they are interested if and when you make this and you sell this, that they will buy it. So there's buying signals, and that kind of customer feedback, focus groups, user validation, traction in terms of testers, alpha, beta testers, right through to users actually either using it for free or paying something or paying full price. You know, if you can get users on sooner rather than later paying full price, fantastic. That's kind of the traction that people want to see, particularly now through challenging times. And one of the things obviously to look out for is asking the company if they are assured from HMRC that you will get your tax relief through SEIS. Okay, so we've talked about the benefits, we've talked about the risks, we've had a wee chat about the kind of what to look for if you're talking to startups and scale-ups. How do you make that first kind of step to thinking about angel investors? It can be scary, it can be daunting. It's you're learning, you're already taking the first step today. And I guess it's about attending meetups with startups, attending pitching events in person or online, chatting to other angel investors, asking questions of the startups. Who are they? What do they do? Do they have those 4 or 5 things that you're looking for in terms of team and product and opportunity? Getting involved with the likes of accelerators like ourselves at Raise and our fellow colleagues we'll talk about at Magic Sauce over in the UK. Think about that syndicate, and that could be a formal or informal syndicate, and that's really a group of angels getting together to say, we really like this deal, we're all on the same page, we all want to invest, but we'll share the load, we'll share the due diligence, we'll share obviously the monetary kind of investment, and we'll all go in together and we'll share the risk. So that's another way. Start by getting to know the startups, become an advisor and a mentor, have a cup of coffee, find out about the startups before you think about investing. One of the good things that we see out in the open to kind of see how this really works is crowdfunding sites. Michael's been involved with a couple of crowdfunding deals, and they do their due diligence as well as a fund would do it, because they have to, because they're FCA. So those crowdfunding sites, Michael, are a really good place to go and see how this works. You might be on mute. Okay.
Yeah, my Wi-Fi is a little bit patchy. Yeah, they're a really good place to go and experience investing for the first time. Likes of Crowdcube or Seeders. You can put as little as 20 or 10 pounds or 20 pounds into a company raising some investment. You then get to see what documentation to expect in terms of what the company shares with you, what the due diligence is like. And then once you make your investment, you can then watch and see how that company behaves, how it grows, what happens, and really use it as an opportunity to learn as much as potentially make a few quid as well. So they're quite effective in that way.
And I think Jan mentioned earlier what angel investor sites are useful. There's many of them. There's Angel Investment Network. there's the UK Business Angel Association over here in Northern Ireland, across into Ireland. There's the HBAN Association, and there's many platforms linked that you can upload as a startup and share your deals with investors, and investors can come on and view deals. C Legals also enables startups to share deals with investors, and it's just about, I guess, picking and choosing the ones that are going to work for you, the right audience as a startup, or the right type of startups as an investor. So there could be, say, for example, demographically, you're interested in particular deals, go and look at the angel network and the platforms in that demographic. HBAN here in Ireland's one. I know GC Angels at Manchester's another. It could be linked to an area of interest. The Green Angel Syndicate is another one in the climate sector. It could be you want to back females in like the Angel Academy over in the UK. So there's lots, or the Waken Hub over here in Ireland. So there's lots of ways of, as investors, kind of narrowing your focus and thinking about how you want to look for startups. Here at Raise, we deal with primarily early stage tech startups building a range in sectors, from finance to cyber to creative to recruitment to sport and even into the digital health and digital transformation. So we have quite agnostic in terms of our opportunities, and I think that's great to have the variety. So that's where we offer different events. Come and meet our startups. Come and listen to our pitch nights. Apologies. We have a pitch night now. We've just finished one in March. We've one in June on Thursday the 22nd. You can attend either in person or online. We'll have a range of startups and scale ups, 4 or 5 that you can have a look at and see if they're of interest. We also have an informal network of angels who invest in startups and share experiences and combine that money. And there's a couple of other networks across the UK and Ireland that might be of benefit to go and, I guess, network with other angels and look for good deal flow. So there's a couple of startups that we're working with right now that are looking for investment in the recruitment, finance, cybersecurity, and mortgage broker industry. Just named a few there. We have a pipeline of deal flow coming through on a regular basis, and there'll be a new batch as well pitching in June that we're excited to showcase. So everything from end-to-end hiring to due diligence from Amazi to cyber risk to dealing with mortgage brokers and clients, right through to attracting talent from a diverse background. So a real real diverse portfolio. So yeah, angel investing is all about investing at that earlier stage. It is high risk, but it does come with potential high rewards. If you get involved early with startups, ask questions, learn from them, do a bit of due diligence, get to know them. Also, ask questions of other angel investors. More and more now through online media, you're starting to see people even on LinkedIn say, I am an angel investor. If they're putting it out there publicly, they'd be more than happy to connect and say, look, I'm thinking about angel investing. What's your experiences? Join education workshops like this, join fireside chats from other angel investors about their experiences and learn from them. Start looking for deals in your industry that you know and you like. If you want to have a wee look at our accelerator, we have a link there, and we have more information on our pitch night coming out on the 22nd of June. And I mentioned earlier Magic Sauce. We have Chris Jones, who works with us at Raise as one of our mentors. He is building a modular course for early stage startups to help them, fast track with simple templates. And the cap table I mentioned earlier is one of the templates that Magic Sauce has used. He also is building a course for angel investors. For anybody joining today, we have a code that we can share to get access to that course to learn a bit more. So really excited to talk about that. And if anybody needs it, please get in touch. So I'll just share our details. So that, yep, that's our email address, jenny@raise-ventures.com. And Eve Jane's going to shout at me because that's not our email anymore.
Don't worry, our that Raise-Ventures website still redirects to the new website, so it's all good.
I'm going to pop off screen share and see if there are any questions. Thank you, everybody, for your time. A wee bit of a whistle stop tour, so please do jump off audio if you'd like, or pop a question in the chat.
Thank you, Jenny. I'll make sure to share that link for the Magic Sauce Angel Investment course, because I had a wee look at it earlier. Very, very useful, even in terms of when you do start to get a little bit serious about a deal. You can reference it back and look at what a term sheet should look like, joining the cap table, you know, what sort of due diligence you should do on startups in terms of their unit economics, their metrics, all of that kind of stuff. So it really is a valuable resource to have a look at.
Any questions, Christoph, KM, Andrew, America?
Type, or can I just ask you like this?
Yeah, go ahead.
Yep. I would like to learn a bit more about, maybe you can say a bit about your syndicate model.
No, yeah, it's something that we've been working on, I guess, on a pilot basis. So because we have such a agnostic range of industries, we've been doing it nearly deal by deal, because investors are interested on specific industries. So we have a couple of deals coming up in the creative sector, in the sports sector, and even in that kind of recruitment sector that we will be looking to build a syndicate around and say, right, a deal's open, is there anybody interested? And I guess that seems to make sense at the moment, and we're looking to build that towards a wider kind of syndicate that, you know, we can develop further to access a range of deals. So we do it on a deal by deal basis at the moment.
Do you have like a specific, let's say, minimum investment for those people interested in the syndicate?
Yeah, I think as I mentioned earlier, anything sort of that 10 to 25,000 is, we talk about, you know, again, 10,000 doesn't go very far, but we understand the challenges of wanting to get started. But trying to have that minimum check, so that, I guess, that's the balance between crowdfunding and angel investing. Crowdfunding, you can do lots of little checks, and it can add up to, and it's all managed through a nominee structure. Whereas angel investing and syndicate, you're nearly going in as your own individual investor. The company is kind of managing, and us, that relationship between all the investors. So the smaller the check, the more investors there are to manage. So I guess that's kind of the balance between angel investors, encouraging them in, but not having too many to manage, because that can be challenging for the founder. So, Michael.
Hi, how you doing? Sorry, I was dropped off there at Wi-Fi, so I'm back on my phone.
No worries. We were just chatting about the syndicate and how we do it on a kind of deal by deal basis at the moment. We're hoping to grow and scale that, and happy to send over some information on that. Christoph.
Absolutely. No, I guess, as we've discussed, I'm sure you've already said everything I'm about to say here, but it's just really supporting and helping members of the syndicate along as they go, so everyone's in it together, and sharing experience, knowledge, just for the benefit of the companies, really is the added value of a syndicate over individual investments.
Yep, brilliant. Thank you very much for the question. Anybody else? No. Oh, yep.
Hello. This is something. It's not just for the angel investment, but I just want to you know, about the race program and everything that you're doing. You know, I actually like what you're doing. You know, and how you're doing those things. I just want to tell you this, what I find as a foreigner here in Northern Ireland. I've been living here for over 10 years. And I have designed few projects, and I applied for several programs here in Northern Ireland. And most of those programs, they're offering you help with the business plan, and, you know, basically helping you to actually like kickstart, you know. But I just find out, you know, there are several programs here. They help you with the business plan. None of those programs will help you from A to Z. You know, I sent a message to the city council because I went with my projects to several programs. They were successful. I was very successful. I also received a business manager from a city council, and they said the business which I have, or the idea and the whole project is great. It will be profitable. It will create jobs and everything. So I just basically said, okay, so you give me the stamp here that this project is great. It's stamped from the city council or from those programs which are run by the city council. So I just basically said, okay, so you're saying it is good, it is valuable. You as in the position as an experienced person, you saying this is good. So I said, okay, so can you fund me this project? I will give you the whole project. I will
I
give you
think that's it's a real challenge. We know there's an awful lot of support around Northern Ireland, and there's different support for different stages and different types of companies. And you know, there's some fantastic local enterprise support and council support for early stage business plans. You're absolutely right, but they don't necessarily have much more potentially than just the programs, and that's, you know, it gets you to a certain stage, and you just have to then progress to the next stage and think about how you broaden your network as a startup, how you present that plan to investors, and as I talked about earlier, getting that traction. So yeah, like it can be confusing as a startup founder, and we've talked about this in the ecosystem quite a bit, but I guess getting the right help at the right time. And again, happy to chat to you after about the program, and Eva Jane can follow up in terms of what we do in the program. It's not necessarily an A to Z, but it's a wee bit, I guess, the next stage, and that's about the due diligence piece. You know, getting investor ready is really important, like for the startup to make sure that they're ready, and also for the investor, because the investor doesn't have a lot of time, and we want to make sure that you guys, when you're looking at deals, that we're making the most of the investor's time. So thank you very much for your question. Christoph, do you have a question?
I have a few questions. On one hand, be really interesting. I think someone offered in the chat to share the cap table, so but that doesn't necessarily have to have on this call necessarily, but be interested to look at that. The other bit is, and excuse my naivety, the situation in Northern Ireland with, you know, kind of being out of the EU, kind of being in the EU. Can you say a few words on, does that kind of affect also your access to, let's say, funding from the EU? Are you still involved?
Sure.
Are you still eligible? How can you make use of that special position that you're in Northern Ireland of being in the UK, of course, but also still kind of being connected to the EU?
Yep, great question. So we are in quite a unique position. So we have any companies incorporated here in Northern Ireland follow the UK law and the UK HMRC, so get access to the tax benefits that we talked about. But we also have access only 2 hours down the road or less down to Dublin, across into Ireland, and therefore into the EU. So I guess from the government perspective, Brexit has reduced our EU funding slightly. The European Regional Fund that would have funded a lot of the programs and given a lot of the grants has been reduced, unfortunately, and we've seen a bit of an effect on that locally. However, to fill a bit of that gap, we have the British Business Bank coming in with their Levelling Up Fund. So Northern Ireland can get access to that Levelling Up Fund, and there's various programs and initiatives coming out from that. And I guess we were talking quite a bit, particularly in an event yesterday, about that Ireland network, north-south and vice versa. We can encourage kind of incorporation in one and you know, sub companies in the other to get benefits of grant funding. And I guess it's really about thinking where your core customers are going to be. It really dictates probably where you're going to incorporate, but there's no reason why you can't have dual market access, have customers and benefits from the likes of intertrade cross-border initiatives. We've seen intertrade offer our companies in the north kind of export opportunities into the south, and you know, a company can get set up quite quickly here in Northern Ireland, be exporting into the UK and exporting into Europe quite quickly. So it's quite a unique position. We're really excited about it, and it's great to kind of have that. Yeah, Northern Ireland companies are one to watch.
This is great. Just if I am allowed a follow-up question.
Yeah, keep going.
Great. You were listing a couple of companies I think a few slides ago. If you want to find out more about these companies in particular, what's the best way apart from, of course, schooling them?
Yeah, absolutely. So we have on our website a list of our portfolio, and I can share with you that link. And also if there's ones in particular in sectors, happy to make introductions and facilitate a call or share a deck, you know, whatever I guess it's about the information that you'd like to see before you'd like to meet them. They'll have investor decks or investor summaries that they could share with you as well. So we have a range from, just thinking back, Jane, there's some from the pitch night. We have some videos from the pitch nights in there. Pitch decks are in those. There's a couple of companies online that in YouTube, on our YouTube channel, and then any of our own portfolio. Happy to any more beyond those 5. Happy to share. So yeah, happy to keep in touch, and we can share the range of opportunities, and if there's anything that takes interest,
Great.
go from
Yeah,
there.
no, in particular, I mean, I'm you know, I'm working with Trust Cloud, and I think a company that you had on your deck there, Umasi,
Yeah.
would be of interest because I think we're working in adjacent. You know, there could be some synergies, and also from the investment angle. So that'd be interesting for me to learn more about them.
Super. Yeah, happy to send over more information.
Super, thank you.
If Jane, anything else I've missed?
No, I don't think so. All of this information we'll follow up with, and I said the best way to get to know the startups is both looking at the website and our portfolio, watching some of those videos that happened back in back in March, to get a flavour of the type of companies that we're working with and the stage that they're at. And then absolutely come along, whether it's in person or online, to the pitch night in June. That'll be a lovely opportunity to really get to know them a little bit better and see kind of a flavour of the startups.
Super. Thank you everybody for your time. Hope you enjoyed the session, and I'll let you go enjoy your Thursday evening.
Danny, thank you very much.
Yeah,
Thank
we'll share the code for the further angel investing training with anybody who signed up on our email list. So I think we have everybody's emails, KM, and we'll be able to share that code with you. All right.
Thank you very much, everyone.
Thanks, guys.
Thank you.
Thanks, bye.
Bye.